You know, in the world of investing, every now and then a story comes along that's just, well, it's too incredible to ignore. And today, we're diving into one of those stories about a precious metal that delivered a return so stunning, it pretty much left everything else in the dust.
Take a look at that number, 120.4%. That was the actual real-world annual return of a single investment back in 2025. And no, we're not talking about some risky startup or a forgotten crypto coin. This was a fund that tracks one of the world's most classic precious metals.
So you've got to be asking, how on earth did an investment in platinum, of all things, manage to pull this off? Well, that's the big question, isn't it? Let's break down exactly what happened, step by fascinating step.
Okay, so the investment that's behind this absolutely wild return is a specific kind of fund, an exchange-traded fund or ETF, that tracks the price of physical platinum. The fund in question is the abrdn Physical Platinum Shares ETF. You'll see it under the ticker symbol PPLT. And in 2025, its performance didn't just climb. It took off like an absolute rocket, delivering that mind-boggling 120.4% return and smashing through to a brand new 52-week high. I mean, this just blew past most other investments and put platinum right back in the spotlight. So before we get to the why this all happened, we really need to understand the what. What is this fund, and how does it actually work? It's pretty interesting. PPLT is what's known as a physically backed ETF. Now, what does that mean? It means when you buy a share, you're not just betting on the price of platinum. No, you are actually buying a direct ownership stake in real physical platinum bars that are sitting in a super secure vault in London. It's kind of like having a digital key to a real-world treasure chest. But here's the most crucial thing to get your head around with this fund: its relationship to the stock market. It has a very low correlation. All that really means is its price tends to do its own thing. It doesn't just go up when stocks go up or down when they go down. And that makes it a really powerful tool for investors who are looking to diversify their portfolios. So, how did this all happen? That 120% spike? It wasn't a fluke. Not at all. It was the result of what you could only call a perfect storm of market forces, creating this massive squeeze on the price of platinum in 2025. The whole situation was this classic economic tug-of-war. On one side of the rope, you had supply that was seriously constrained. It was just getting harder and harder to get platinum out of the ground. And on the other side, you had demand that was just ramping up from all over the place: industries, jewelry, and investors. The price? It was caught right in the middle, getting pulled tighter and tighter. Let's dig a little deeper into that supply squeeze, because this is where it gets really interesting. The world's two biggest producers, South Africa and Russia, both hit major roadblocks. In South Africa, you had floods and all sorts of maintenance issues that caused their output to drop by 5%. Meanwhile, Russia's output fell 7% because they were struggling to transition to new equipment. And with new mines being incredibly slow and expensive to get up and running, there was just no quick fix. The supply was stuck. Okay, now let's look at the other side of that tug-of-war: demand. A lot of people think platinum is just for jewelry or investment bars, but that's not the whole story. A massive 42% of all platinum goes into catalytic converters for cars, and another 25% gets used in all sorts of other industries. When you add that all up, you realize that nearly 70% of all platinum is absolutely essential for the global economy to even function. And here is the real kicker. This whole imbalance wasn't just a one-off thing. Experts are now forecasting a long-term structural deficit. In simple terms, that just means for years to come, the world is expected to need a lot more platinum than it can actually produce. This projected shortfall creates this powerful, long-term tailwind for the price. Okay, so that explains the past. That's how we got that incredible run-up. But what does the future hold? I mean, after a massive jump like that, what are the experts predicting for platinum prices moving forward? Let's take a look. Well, the consensus among analysts seems to be that this isn't over, not by a long shot. Major players like Bank of America have seriously upgraded their price forecasts for the coming year. The general feeling is that the fundamental supply shortage that caused the spike in the first place, well, it's here to stay. And this chart, this really puts that potential into perspective, doesn't it? While the average forecast sits right around recent prices, some analysts believe that if the conditions are right, the price could surge even higher. It suggests that even after that massive run-up we saw, there could still be significant room to grow. So we've seen the data, we've looked at the forecasts, but what does all of this actually mean for you, for a potential investor? And maybe more importantly,
who is this type of investment really for? This is the core dilemma right here. On one hand, the case for investing is pretty compelling. You've got that structural deficit, it's a great tool for diversification, and it's a potential hedge against global risk. But, and this is a big but, the risks on the other side are very real. Platinum is notoriously volatile, daily price swings of 2 to 3% are not uncommon, and its price can get hit hard by an economic slowdown.
So, who is this for? Well, the analysis really suggests it's for investors who are specifically looking for diversification, who have a high tolerance for risk, and who are fundamentally optimistic about global industrial growth in the long run. Let's be clear, this is not for the faint of heart, and it's definitely not for anyone looking for stable, predictable returns.
The source report we looked at also outlines a potential strategy for those who do fit this profile. It suggests starting with a modest 5 to 10% allocation in your portfolio, and crucially, it recommends a phased entry, so investing gradually over several months to average out your purchase price instead of just jumping all in at once. It even talks about using tools like options to protect against that significant downside risk.
And that really brings us to the final critical question. After its incredible run, is platinum a golden opportunity that's being fueled by a genuine supply crisis? Or is it a bubble under intense pressure, just waiting to pop? The data points in both directions, leaving a really fascinating question for the market to answer. We'll have to wait and see.